We are in a window of opportunity when it comes to affordability with housing. And in this video, what I'm going to do is I'm going to actually break down the price pullback we've seen. So prices have become a little bit more affordable. Interest rates have also come down as well too. Now, couple that all together with more inventory on the market brings this window of opportunity for buyers in the housing market. I'm going to talk specifically about the Orange County housing market, but this is probably relevant in most places as well too. So let me go ahead and dive in. The first thing I want to talk about is in last month's market update. So in the August market update we put out, we saw a $55,000 decrease in the median home price. So does this mean prices are coming down? Well, it means month over month they are. Now, generally speaking, they're flat, but if you're in the market and shopping and you have not bought a home yet, things right now are more affordable than they were 60 and 90 days ago, especially for two reasons. Number one, prices have actually pulled back a little bit. We're going to continue to see this through the winter, but we're already seeing it. So right now we saw a $55,000 decrease from the peak of home prices at 1.23 down to a new median home price of 1.175. So that's a $55,000 decrease. That's section number one right over here. Section number two is that interest rates have pulled back. Now, I'm not quoting rates here, but if I look at Mortgage News Daily and it tells us basically where rates are at. So we have gone from almost 7% down to just over 6.5, right? So if we round easy numbers, the math that I have is I'm going to use a 7% interest rate versus 6.58, which is what I pulled when I did this math. Now, inside of all of this, which we're not really talking about in today's video, is inventory has increased as well too, like in a big way. We have 30% more inventory than we saw the same time last year. So we're finally back to normal inventory rates. So buyers have this window of opportunity we're talking about. Buyers actually have lower prices, lower interest rates, and more inventory to choose from. So here's actually how much affordability changes. So I'm gonna break down very simple principal and interest. I'm just for your mortgage payment. And I'm just gonna use a 20% down payment so that we don't have mortgage insurance, just to make the math easy. So here's how we look at this. These are I'm gonna put the old numbers over here and compare those with the new numbers here. Old numbers. Last month, median home price, $1.23 million at a 7% interest rate, which is roughly where we were at. That brings you to a payment of $6,555 for just the principal and interest, right? So that's kind of where we were at, let's say 30, 60, 90 days ago. Now, where we're at today, and I would even argue it's probably better than this, but this is real data, is home prices have come down to 1.175. So there's $55,000 in savings there. And interest rates have come down to 6.58. Now, the reason I'm showing you like this is I want to show the difference. Yes, $55,000 is a lot of money, but it doesn't really affect the payment all that much. But when you pile that together with the interest rate drop, that brings your new principal and interest payment down to $5,990, which for those of us like myself that are not math majors, that is a $560 difference. So is that a lot of money? Is that a huge increase to affordability? Well, I don't know. It depends. It is like something like 150 different Starbuckses of savings per month. So if you are like me and you get a lot of coffee right here. If you're like me and you drink a lot of coffee, you could buy an extra 140 Starbucses per month and you'd be the same. But here, that does not tell the whole story. Here is the whole story. And I've made videos in the past that show just how much buyers are willing to pay on payment, right? So here's the reality, is buyers have already demonstrated they were willing to buy at these numbers. That was the median home price, 1.23, and this 7% interest rate is pretty much what we've had for the last 2 years almost. So that means buyers are willing to pay that $6,550 payment, right? Again, principal and interest. So what does that mean for these lower interest rates, right? So if we take the lower interest rate and we kind of reverse engineer to figure out what would the price be. So if you take that, if buyers are okay with that $6,550 payment, now what that tells us is with just this little drop in interest rates, we're talking less than 0.5%, that actually would bring up to the price. If you took that same interest rate to get back to the $6,550 payment, the same as this one over here, prices could go up to 1.285. Now, this is with just a 0.42 decrease in interest rate. So less than 0.5%, $110,000 in purchase price affordability. So this is why we say this is a window of opportunity right now and that it will likely be shutting by the end of the year, is because there's so much more inventory in the market. A lot of buyers stop searching in this summer, so buyer demand will go down. Fewer sellers will put their homes on the market, but inventory will likely continue to rise. So there's opportunities for buyers to go out there. So your affordability as a buyer, let's just say you were looking at the median home price, just increased by $110,000. Now, the second thing is this data is old. So the data that we pull on our market updates, I mean, it closed last month. So it's already, I'm filming this on the 12th of August. It's already 12 days old. And a lot of these times it's a 30-day escrow. So it went into escrow 30 days before that. So we're really talking about 60 to 75-day-old data when we look at this. So what we're seeing right now, this is the big, beautiful context of us having thousands of conversations and helping hundreds of people move every single year, is we get a lot of context of what's actually happening. So here's what it is. Buyers right now, 90 days ago, this was not happening, but buyers right now today are negotiating bigger discounts off price on, especially on listings that are not hot listings. I'll get to that in a minute. Buyers are getting bigger discounts off price. Buyers are able to negotiate terms much better, so they don't have to move quite as fast, and they're able to negotiate seller concessions. A lot of our customers right now, we are negotiating seller concessions that helps them lower that interest rate even more. I had a client that we just closed on their first property, and we got enough seller concessions for them to buy down their interest rate almost a full %, which drove a massive difference to their payment. And we got a discount off of the price, and we were able to negotiate repairs. And these are things that just were not happening at a big scale 90 days ago. You might have had a great deal here or there, but not in general, versus this is what we're seeing almost normal right now. So yes, prices have pulled back. Yes, interest rates have pulled back. Buyer affordability has gone up disproportionately to that $55,000, really double that. And we are negotiating even better deals than that. So the reason I'm putting this video out here is this window of opportunity is going to close, and it'll be closed by the end of the year. So if you're watching this video January or beyond, this will sound like another market update that I gave back in this winter of 2020, which was the last time we saw something like this happen. So if you want to take advantage of this market, what I recommend doing is booking a discovery call with our team. Whether you are a buyer or a seller, we'd be happy to walk you through what we are seeing in the marketplace so you can take advantage of this, make the most money off your deal, or save the most money off your deal, and stay protected through the entire process. The discovery call is no cost, no obligation. You can always go to the link in the description or go to allaboutoc.com, drop your information, and we would be happy to help you out with your deal. Otherwise, go ahead and watch this next video because I think you'll find this interesting as well too.